Guys, the current US stock market has a lot in common with what happened right before the Great Depression in 1929. The Great Depression, which began in 1929, is always listed as one of the top 10 events that changed world history. During that time, the Dow Jones Index plummeted by a shocking minus 90% over just 3 years. Imagine investing 100 million into US stocks, only to find your account left with just 10 million. Terrifying, right? If we understand the causes of this massive stock crash from a century ago, we'll be able to read the flow of how asset markets rise and fall. Let's get smarter with just 1 minute of your time. The 1920s were a golden era for the US economy. Electrical technology was advancing rapidly, and companies like General Electric (GE), founded by the inventor Thomas Edison, were booming. GE stock soared from $130 in 1925 to $396 by 1929. And RCA, a company that led the radio revolution, skyrocketed from $20 to $500. The market was celebrating, but there was a hidden problem. Many people were investing with borrowed money. The myth spread like wildfire. US stocks only go up. Margin loans exceeded $8.5 billion, and most investors bought stocks on credit. But when stocks rise fueled by debt, what happens when the bubble bursts? It becomes a disaster no one can control. Then came October 24, 1929, Black Thursday. The Dow Jones plunged minus 11% in a single day. GE and RCA crashed minus 50% in just one session. Stock prices collapsed, triggering bank runs and plunging the economy into panic. Yet US President Herbert Hoover refused to intervene, saying, "I won't interfere with the market." As a result, from 1929 to 1932, stocks crashed minus 90%. GE stock fell from $320 to just $32. Almost worthless. This is bad. We need to protect US industry. Hoover decided that foreign countries would have to pay heavy tariffs if they wanted to sell goods in the US. In 1930, he passed the Smoot-Hawley Tariff Act to save America alone. But this move plunged the global economy into deeper chaos. In despair, Europe saw the rise of Hitler, and Japan turned to militarism, igniting the Second Sino-Japanese War. In short, World War II was triggered by the US stock market crash, the Great Depression. So, is today's AI-driven US stock market any different from back then? Look at Nvidia. It went from $50 in 2020 to $1,000 in 2024, just like how RCA exploded before the Great Depression. Sure, Nvidia's earnings, based on its monopoly in AI chips, are amazing, so you might say it's not a bubble. But remember the recent DeepSeek incident in China? Technology, as always, eventually caught up to buy others. Even a small trigger like DeepSeek caused a minus 20% plunge in stock price. What would happen if a much bigger wave were to hit? According to the International Institute of Finance (IF) in 2023, global debt has reached $300 trillion, exceeding 350% of global GDP. Can we confidently say that things are totally different from 1929? The history of bubbles has always burst under high interest rates. That's why we must pay close attention to one thing: the US 10-year Treasury yield, the benchmark for global interest rates. History tells us this: technology evolves, but human greed never changes.